Hey, beautiful people, and all you entrepreneurs out there. Tax credit. This is what many people have been seeking after in so many different ways. Now, this specific tax credit that I'm going to show you is specific to people who have businesses. If you have business, no matter whether you're a barber, you own a truck company, you run a logistic company, you are a private investigator, you do real estate, it doesn't matter what it is. Here it is for you. I've done all the research and I've accumulated everything for you in one go. The amazing part is how easy it is to actually enforce this, which I'll show you towards the end of the video. This is an official IRS website. Had to zoom that up for you so you can actually read it along. Employee Retention Credit Limitation. The Infrastructure Investment and Job Act, enacted on November 15, 2021. Let's go down. The Employee Retention Credit is a refundable. I want you to listen to each and every part of this very carefully, because if you follow these steps, you can get it. The one that I know of took me 14 weeks to actually see it reflect. You might do it a little bit quicker. That took a long time. I'm not saying it's going to take shorter than 14 weeks, but this was my experience. And of course, the more people jump on this bandwagon, the less chance things get. But nonetheless, this is known by those who know about it. Others who don't, cool. I'll show you all the caveat and all the loopholes to it. The intent was to put this on Patreon, but why give it to a limited amount of people when I'm sure there are many entrepreneurs out there? The Employee Retention Credit. Credit is a refundable tax credit. The Employee Retention Credit is a refundable tax credit. You want to get IRS and other entities to write you checks based on, credit. This is what a lot of people want to do with the whole 1099 stuff, and they're just handing it to you now under the whole C-19 situation. You have to be able to see these things when it comes. The Employee Retention Credit is a refundable tax credit against certain employment tax equal to 50% of the qualified wages an eligible employer pays to employees after March 12, 2020 and before January 1st, 2021. The qualified wages and eligible employers will go over that. And what does this stipulation of 50% of the qualified wages mean? Meaning they're telling you, we are going to give you a refundable tax credit if you qualify, you being the employer, meaning you have a business. This is not some quasi fake stuff that you're just trying to get away with. No, you actually have a business and you have qualified wages. In short, this qualified wage is if you're compensating someone and it's reflected on your books one way or the other, whether by way of W-2 or other means. That I'm not going to speak of here. They're letting you know that we will give you a tax credit for the equal amount of 50% of whatever you compensate your employer. So say within a period of from March 12, 2020 all the way to the end of that year, 2020. So March, June, July, August, September, October, November, December. They're letting you know for about 2.5 quarters, we're going to give you monies. And that money is 50% of whatever you paid your employers. That's what this first sentence meant. Let's keep on reading. Eligible employers, which we'll go over who qualifies as eligible employers, can get immediate access to the credit by reducing. Now, by the way, I'm letting you know this thing called immediate access is not. It took about 14 weeks. So don't get carried away with this immediate access thing. Immediate access to the credit by reducing employment tax deposit they are otherwise required to make. What is tax credit? Investopedia.com. A tax credit is an amount of money that taxpayers can subtract. Then whoever is filling out that form, you are deemed a taxpayer until you show otherwise, can subtract directly from taxes owed to their government. Unlike deductions, which reduces the amount of taxable income, tax credit reduces the actual amount of tax owed. This is what you want. Isn't this what everyone is running after? And they're even telling you we would even give it to you. You don't necessarily have to previously owe anything, but because of this public issue going on, we'll give you this amount. Just claim it as tax credit. The good part about this is it's not taxable. Tax credits, specifically this one, it is not taxable. This is not a taxable event. Here's another thing that's probably important for you in the future, especially if you have a 98 number, which is for banking purpose and all that, right? And you've structured the hierarchy of your businesses correctly. Got the proper trust, you got the express trust, you've done everything right. You got the proper evidence to show how everything is linked. Even if you don't have an express trust or a 98 number and all that stuff, and you haven't really linked everything properly, but somehow you still know how to deduct things from all those supposed taxable income. What will be necessary based on the tax credit and how it's done with tax credit is the deductible amount, or the amount that qualifies to be deductible. That tax credit will be removed from it. So say your business makes 60K each year, right? And usually you would deduct a certain amount, a taxable amount from that 60K in order to reduce taxable income. And you get 10K from this Jobs Act. Instead of you making the 60K with taxable income, it will be 50K because this has been credited to you. Even better, because now you have less amount to leverage on the books. Run this through your CPA. Let them watch this. I'm sure they're already aware of this, but ask them about this. Ask your CPAs about it. Listen to this. They're telling you that you can reduce the employment tax that you are required to make. You can get 50% of whatever you compensating them back. Also, if the employer's employment tax deposit are not sufficient to cover the credit, the employer may get an advance payment from the IRS. See this latter part? That's not what we're looking for, because this advance payment, no. If you look into finance dictionaries about what advance payments are, you don't want to get into that. You want to get into something that doesn't have recourse, and they have stipulated it out here for you. Why? Because of the pandemic. Let's keep reading. For each employee, wages up to $10,000 can be counted to determine the amount of the 50% credit, meaning the limit amount that you can get that 50% of from per employee is $10,000. So let's just say you compensated someone from the time period of March 12, 2020 to the end of that fiscal year, which is before January 1st, 2021. You compensated them $10,000. you're able to get tax credit equal to 50% of this, which is 5,000 for each employee. So just say you only have one employee working for you, right? That's 5,000 bucks right there. Remember, you actually have to have a business here. We're not talking about someone looking for some quick get rich scheme or some opportunity to take advantage of, quote, the system. I'm showing you the official words from the publication of these guys that everyone hates so much. It's up to you to heed these words or not. It then goes on to say, employers, including tax-exempt organizations, employers, including tax-exempt organizations. I presume if you're watching this, or if you subscribe to this channel, you at least know how to have an unincorporated association or a tax-exempt organization. If you don't, contact me through my email. I'll assist you get that done. But when it comes to filling out all these forms, it goes on to say employers, including tax-exempt organizations, are eligible for the credit, meaning they're not taking anyone out. Preferably, this should be the entity you're coming through, because this removes the if, ands, and buts of the tax liabilities. Employers, including tax-exempt organizations, are eligible for the credit if they operate a trade or business during the calendar year 2020 and experience either, meaning this is the time period which this tax credit is applicable to your business, and these are the conditions. And who does it apply to? Each of your employee. The maximum amount is 10,000. And what is the contingent of the 10,000? 50% of it. From March 2020 to December 2020, for each employee, you can get 50% of whatever you pay them from that time period, up to a maximum of 10,000 bucks. Again, from March 12, 2020, all the way to the end of 2020, for each employee that you compensate, you can get up to 10,000 bucks for each of those employees and tax credit. So the most that you can get is if you had compensated James Brown from March 12, 2020 up through all the way till December 2020, you compensated him 20,000 bucks. You're going to be able to take 50% of that as tax credit, because the maximum you can claim for each is 10,000. And they tell you, even if you're a tax exempt organization, this applies to you also. Even better. They then give on further details. The full or partial suspension of an operation of their trade or business during any calendar quarter because of the governmental order limiting commerce, travel, or group meetings due to COVID-19. Meaning we've given you the numbers behind what we're willing to give you as tax credit. And for what reason? Well, because there's a full or partial suspension of your business operation during this calendar year from March 12, 2020 before January 2021, which is December 2020. During the calendar year 2020, during any calendar quarter, because, which is the stipulation right here, because of governmental order limiting commerce, travel, or group meeting due to C-19, all states have those orders, and that's undisputable. A significant decline in gross receipt. I mean, these don't even require anything special. A significant decline in gross receipt begins on the first day of the first calendar quarter of 2020, January 1st, for which an employee's gross receipt is less than 50% of his gross receipt for the same calendar quarter in 2019. So they're going to be making comparisons. So if you have QuickBooks or if you have a payroll app that you use, or if you keep track of it, you're going to be able to make the comparison yourself. And you'll be able to tell if you qualify for it, which most likely you will. Again, it requires nothing special. They're letting you know the decline here in the second condition as to why they're giving you 50% of whatever you've compensated someone from March 12, 2020 to December. They're telling you the decline has to begin on the first day of the first quarter, and your gross receipt has to be 50% less in comparison to the previous year. Qualified wages, remember, they say up here, the employer retention credit is a refundable tax credit against certain employment tax equal to 50% of the qualified wages an eligible employer pays. If you have a tax exempt organization, you are eligible based on these conditions. So we've qualified who is an eligible employer. Now, what are the qualified wages? They tell you, they give it to you. Qualified wages. The definition of qualified wages depends on how many employees an eligible employer has. So now the wages that qualify for this tax credit is based on the amount of employee that you have. Well, let's keep on reading. If an employer, you, averaged more than 100 full-time employees during 2019, qualified wages are generally those wages including certain healthcare costs up to $10,000 per employee, paid to the employee that are not providing service because operations were suspended, blah blah blah, which we want to run over. These employers can only count wages up to the amount that the employee would have been paid for working an equivalent duration during 30 days. If an employer average, now, my thing is, if you are, say for instance, real estate, and you're using the virtual customer service, this probably wouldn't apply. You probably wouldn't have more than 100. If you are a trucker, for micromanagement, sometimes the bigger your company is doesn't necessarily mean it's going to be better. In fact, most businesses that make a good amount of money keep it in-house. So I doubt this would apply for the majority of the people. And if your entity has more than 100 full-time employees, then you most likely already know about this. You already most likely have an inside information about this. So this is not even the group of people we're talking about. We're speaking about this next section, which is people with fewer than 100 employees, which is what I care for and why I'm doing this. If an employer averaged 100 or fewer full-time employees during 2019, qualified wages are those wages, including healthcare costs, including, meaning it's not the limitation, up to $10,000 per employee. Then you don't have to have this, but if you have this, then sure. Then that healthcare cost is included in the $10,000 limits that you have paid. Remember this $10,000 that you're able to get? They're telling you the limitation that we can give you $10,000, and we are putting into consideration the healthcare costs that you've compensated your employees while they're working for the business. Paid to any employee during the period operations were suspended or the period of the decline in gross receipt, regardless of whether it's not or not its employees are providing services. Look at that. So you can have less than 100, meaning anywhere from 1 to 100. You qualify for it. Your entity qualifies for this. Claiming the credit. How do you do it? In order to claim the new employee retention credit, tax credit, eligible employers, which we've went over the qualifying factors, will report their total qualified wages and the related health insurance costs, which probably wouldn't apply to most people, for each quarter on their quarterly employment tax returns, which will be the Form 941. These people are telling you the forms you have to fill out to do this thing. And I'll take it a step further. I'll tell you how to even make it more easier. For most employers, beginning with the second quarter, which is the time period which they have entered into this contract to give businesses those amounts. The credit is taken against the employer's share of Social Security tax, but the excess is refundable under normal procedure. They're telling you they are tapping into that Social Security account, and from there, that is where they're giving you those tax credit. Now, like I mentioned earlier, this is not a get rich quick scheme here. You have to actually be doing business. A little bit more detail, just so if you're still kind of hesitant, that's fine. But like I always say, the least you can say is someone never told you. If you have a business, you're a man, you're a woman, you're an entrepreneur, you have a business, and you qualify for these basic things, they're letting you know over and over, this is a tax credit. So all the typical liabilities that would exist in other circumstances, it's not apply here. And I presume if you have a business, you probably have some way of keeping an account of your ingoing and outgoing, which is a normal procedure. So this shouldn't be an issue for you at all. So what if your entity has gotten the PPP loan? The people who are going to give you the tax credit are telling you, under Section 206C of the Taxpayers Certainty and Disaster Tax Relief Act of 2020, an employer that is eligible for the Employee Retention Credit, which we run over the qualifying factor, can claim ERC even if the employer has received a small business interruption loan under the Paycheck Protection Program. The eligible employer can claim the ERC on any qualified wages, which we ran over what qualified wages are, that are not counted as payroll costs in obtaining PPP loan forgiveness. So there's a qualifying factor. But see all these nuances? I'll show you an easy way to really let that go. Any wages that could count towards eligibility for the ERC or PPP loan forgiveness can be applied to either of these two programs, but not both. Please disregard the caution paragraph under the line instruction for a non-refundable portion of employee retention credit from worksheet 1. And the instructions for your employment tax return, as information in that paragraph is no longer accurate after passage of the Tax Certainty and Disaster Tax Relief Act of 2020. Even if you've gotten the PPP for the business, you can still get this tax credit. What all this simply means that had your entity received the PPP loan, whatever weeks that loan was applied to would be omitted as though it never existed. So they're just going to skip it. That's what all this basically means. But wait, so is it just limited to that time period of March 12, 2020 to December? Nope, it's not. They updated it. Internal Revenue 2021-21, January 26, 2021. New law extends C-19 tax credit for employers who keep workers on payroll. Let's go to the specific part. Employers are eligible if they operate a trade or business during January 1, 2021 through June 30, 2021. So this is basically an extension of that first one. Remember, the condition to this first one when it was first released was from March 12, 2020 all the way to December, meaning before January 1st. They give it the basic conditions. And then they extended it, beginning from the limits of the previous one, January 1st, 2021. Beginning from the limits of that, all the way to June 30, 2021. And the good part about this compared to 2020 is rather than it being 50% as it was for 2020, 2021, it's 70%. Now, of course, it's still capped at 10K. Qualified wages are limited to 10K per employee per calendar quarter in 2021. The difference between the 2021 and 2020 version is the 2021 is per quarter throughout the whole 12-month period. Per quarter. The cap is 10K per employee per quarter. And you can get a tax credit up to 70%. Same principles exist. Again, the only difference between 2021 and 2020 is 2021 allows you up to 70% of whatever you've compensated them, and the cap remains the same. But this time it is per quarter. Do you see this? I'll just leave that at that. So let's just say worst case scenario, right? You have your little business here and there, but all those qualifying factors that we mentioned, you fell under half of about the category, but not all of them. Is there still hope for you? Beautiful people. Yes, there is. The IRS releases something called Guidance on the Employee Retention Credit under Section 2301 of the C-19A. They release guidance brochures on these things. And notice 2021-20 lets you know. So they give it in a form of, these people are, oh my goodness. They put it in form of question and answer. What questions do you have? We got an answer for you. We'll even give you an example. So keep running away from the IRS. But if you're doing business and you're true to commerce and you function in good faith and you're not looking to take advantage of anyone, I'm looking for some free stuff, this is your time to claim tax credit. And they are giving you a step-by-step guide. What we're looking for is question 12. This is the brochure that they've created for the purpose of guiding people step by step to do it. Page 28. Question 12. If a governmental order. So the reason why I came here to this brochure is, what if you don't fully qualify for all those qualifying factors? Is there still anything else that would allow me to be able to qualify for this? Yep, there is. Listen, question 12. If a governmental order causes the suppliers to a business to suspend their operation, meaning whatever it is that you're doing internally is not the cause of the suspension. But nonetheless, the governmental order of that pandemic caused the people who supply you your supplies. Without supplies, business can't function. Supplies are the backbone of commerce. Hence the terminology in economics, supply and demand. If you cannot get your supplies, what if the type of business you're doing is on demand because of the pandemic, or regardless of the pandemic, there's still flow of business? And they're not even requiring you to say, well, to prove whether there's demand. They're not requiring you. But they are nonetheless saying that if the public issue that's going on cause your supplier to suspend their operation, or for whatever reason you were not able to get your supplies and your business were suspended because of lack of supplies, if a governmental order causes the suppliers to a business to suspend their operation, is the business considered to have a suspension of operation due to governmental orders, which is the qualifying factor that we went over, which didn't talk about suppliers. It spoke about the full or partial suspension of the operation of their trade or business during any calendar quarter because of the governmental orders. It spoke nothing about suppliers. But well, we know people might have questions. So we've created a guide for you so that you know what the scope and the limits of applicability is. So someone comes along, if a governmental order, as you mentioned earlier, causes the supplier to a business, the supplier now to suspend their operation. Is the business still considered to have suspension of operations? They then tell you, here's an answer. An employer may be considered to have a full or partial suspension of operation due to a governmental order if, under the facts and circumstances, the business suppliers are unable to make deliveries of critical goods. All it takes is just an affidavit to use this verbiage. Unable to make deliveries of critical goods or materials due to a governmental order that causes the supplier to suspend its operation. So this is all contingent on activity of the supplier, meaning you're not able to get your supplies that are critical to the operation of your business. If the facts and circumstances, which is the delivery of critical goods and materials, if the facts and circumstances indicate that the business's operation are fully or partially suspended as a result of the inability to obtain critical goods or materials. They keep repeating these words for you. They are slapping you in the face with it and telling you, look, here are the keywords here, from its suppliers because they were required to suspend operation. Then the business will be considered an eligible employer for calendar quarters during which its operations are fully or partially suspended and may be eligible to receive the employee retention credit. So the scope of how you qualify is not just these two listed here. If your supplies did not reach you, and is somehow consequently partially or fully suspended the operation of your business, which is linked to the C-19 pandemic, which is enforced through the governmental order of each state, then yep, you qualify. They're telling you. Let me put this in other words for you. See this part where it tells you about gross revenue reduction and decline? If you didn't get your supplies and your business and commerce was put on hold, ask yourself, do you need to provide the proof of this revenue reduction? I'll leave it at that. Moving on to the next one. But you know what, before we move on, let me propose this question to you also. Usually your CPA will be able to do all this for you. If you have a CPA, that's real cool, thumbs up. But most CPAs are not going to do this because CPAs don't deal with payroll stuff. They're not, because technically speaking, all this is categorized under payroll. So how then do you do this? That is the question. Remember, they give you the form 941. They tell you which form to fill out. Right here, claiming the credit, form 941. But what if you don't even want to put your hands on this and you want to get a third party to do it for you? It's very simple. It's the same as if you've ever did the TPP for the business. The third parties that do this for commissions, just like you would compensate a CPA to do it. Well, there are CPA businesses that are set out and sanctioned by the same CARES Act and the Work Opportunity Tax Credit and the Infrastructure Investment and Job Act that are sanctioned to be able to do these things on your behalf for fees. Just like with the Copyright Act on a national level and the Hague Convention for Copyright sanctions entities to be able to issue copyrights based on those national and international laws. Well, these acts on a financial level sanction those entities. If you have a business and you know what you're doing, and based on these qualifying factors and this exception here, based on their publication, irs.gov/pub/irs-drop/n-21-20.pdf. If you're going to read any PDFs, read the ones that matters. Really, from the looks of it, almost all businesses qualify for this. So if your CPA is not willing to do this, or if you've not established enough relationship for your CPA to want to do this for you, no problem. Not a problem. There are sanctioned third-party CPA companies that will do this. And here's one of them that will do this. I am going to put the link down in the description, the one that I use. Click that link and it will take you there. And I'll give you a little caveat to assist you. You're going to need two main documents. That Form 941 that was mentioned that we went over on the website, you're going to need it for 4 quarters for the year 2020 and for 3 quarters for year 2021 to save you the headache so you know what to expect. And 2, you're going to need a detailed payroll report from March 13, 2020 to September 30, 2021. This is something that gave me a lot of headache to figure out, these time periods. And I'm just giving it to you. Put it to use. And this will include all the basic stuff, like the deduction, payments, contribution, all that. So once again, if you have a legitimate business, this is for you. If you're an entrepreneur, this is for you. This is not for people looking for a quick way, quick scheme. I have explained everything you need to you, and I have given you the link in the description. The least you can say is someone never told you. There are big companies putting this to use on the back end. There are those privy to this on the back end, and then it's just being handed to you. Put it to use. All the details, ins and out, has been given to you. Put it to use. And more importantly, look at these websites. Read them yourself. Go through it. Go through it. You sit down and read these also. It's right here in front of you. It's all been handed to you. You're looking for tax credit. You're looking for someone to send you a check after filling out all those tax forms. They've made it easy. They give you step by step right there. Best of luck. Hey, and don't forget to join my Patreon. There you will find videos that I don't upload here on YouTube, and my own application of the laws and other aspect of things that I don't speak on here, and some of the documents that I've used. You can also go to the links that's shown on the screen to see the list of documents, and you can listen to these videos through Anchor, and there's an Instagram page and a Facebook page. All right, the link is on the screen and in the description. Take care.